In this video, we're going to talk about how to use price action rules to help us navigate market correctly. We're looking at S&P 500 M&A futures. The time frame is 2000 tick chart, which is similar to 1 minute chart. We started with pretty textbook price action, downtrend, break, high probability setups at the EMA, push to new extreme. But there was another push down, and also if I'm going to analyze this structure, I can see that the real downtrend started actually from this point, not really from this point. So because we push lower again here, and I can see that the downtrend is a little bit longer, I decided to widen the channel. I have a lot of confirmations here, here, and here, and right here. So it aligns with the EMA, and the bias right now that I'm taking into consideration is bearish. I'm only thinking about short opportunities. So I want to see market correct to the EMA. I can't take any short right now because we're so far from the EMA. So let's see what's going to happen. We're breaking above the exponential moving average. So if I want to sell, if I'm a seller and I expect this downtrend to test the new extreme following the trendline rule, I need to see EMA acting as a resistance, just like here. Okay, we broke above EMA, and I have a second entry short now, but it's above EMA and it's an inside bar. That's not a good setup for me to short just yet. We broke above EMA, this is an inside bar. So if I'm thinking about selling, which I am, I need to see push back below the EMA, and I want to see a lower high confirmation setup. It will look a little bit like this. Let's see what's going to happen. So right now I'm a little bit patient. Okay, we're going a little bit sideways. This is not what I want to see. No real good trading opportunity yet. Okay, so I'm just going to redraw a small consolidation like this because flat EMA. We're breaking lower. This low is still higher than this low inside of the channel. So I still expect prices to test the new extreme, the technical new low, but let's see what's going to happen. I'm going to redraw the short-term uptrend. Right now what I'm thinking about is taking some short setup at the top of this consolidation because it would align with the direction of the main trend while the downtrend needs to get new extreme. Remember, I'm not thinking about buying because we traded down and we need to get new extreme. We're correcting. Now we have new low, first entry short, pullback, second entry short. Technically this low is lower, but I can reset the count here because I have so many matching lows. So I can view it as a visual second entry short. This is a decent setup. Problem is the signal bar is not the strongest. The signal bar is not the strongest. It was a little better before I reloaded my data. So this is not the best setup due to the signal bar. If you have stronger bar closing below EMA, you can actually consider selling because you have breaking new high again. Uptrend played out. You expect new low, but I have to market a little bit more aggressive like this. And market tested new extreme. Downtrend, broad consolidation, push to new extreme. So the trendline rule in price action played out. And now what I'm going to do, I'm going to pause looking to go short. There is no reason right now for me to continue selling. Okay. Of course, anything can happen. Market can continue working lower, but I need more information. As of right now, as I'm watching this live, I have a break in new extreme. And I am thinking right now about reversal pattern above EMA. Micro double bottom, new low, first entry short, pull back above EMA. So this is quite a good sign for bulls. We are breaking above EMA. If the EMA is going to hold, failed second entry short reversal pattern would be good. Yes, we have a failed second entry short here, but initially we broke below the EMA. As you can see, we broke below EMA here and here. So even though you're closing above, it's a little bit sideways to take a failed second entry short like this. Once again, if you can get a failed second entry short fully above EMA, that's a good sign. There is a reversal pattern because downtrend played out and you have a push above EMA. So expecting reversal makes sense. But because it broke below EMA, a little bit more risky. So gotta be careful. And now you have interesting setup because you have new high, first entry long, pullback, second entry long. And this is not only second entry long, you can view it sort of as a continuation of the failed second entry short because the traders who bought failed second entry short, the buyers that are still in the market, is a great high probability setup second entry long combined with the failed second entry short. EMA keeps holding, uptrend is new high, and what a massive momentum working high. This was the trade of the day. Quick push to the upside. Now, this leg is so much longer than this initial tiny leg. And if I'm going to take a look at a higher time frame, for example 10,000 tick chart, I can see that it looks like there is one uptrend working higher. Uptrend is still in play. So this leads me to believe, okay, there can be potentially some wider channel. But if I'm going to draw a wider channel, I have massive overshoot. Okay, I don't want to draw it like this because this seems super broad. Okay, it's too early. So much empty room here, only one confirmation. This looks more like overshoot because such a 90-degree spike up depletion, and overshoot means I can expect stronger correction in the opposite direction. We can have a breakout trend line or sometimes reversal. So after overshoot, I have to skip the very first second entry long because I can have stronger correction in the opposite direction. So market is correcting, it's correcting. We have a new low first entry short, pullback, second entry short feather, but I don't want to take it just yet. Actually, I had my channel a little bit like this. We were gliding off the trend line. I don't want to take it because we had overshoot. Okay, this is a small channel. This is not super strong uptrend working hard. This channel is just about to be established. It's also quite stacked, but mainly due to the overshoot. This was a very violent overshoot. We can definitely have stronger pullback, so I can't take for second entry short. Market keeps going higher, keeps going higher. It's going sideways now. We're just going sideways. I'm going to mark the congestion. At this point, I can't take anything. We have 10 bars stacked right next to each other. Massive congestion. And you can see it's acting exactly like overshoot because you have the stronger spike into the trend line. And now this pressure needs to be released to the opposite side. So this is very typical what happens after overshoot. The prices are struggling to go higher, but market will eventually break lower. Exactly what you expect after overshoot. And you will break above EMA. So I have one leg down, break, second leg down. So downtrend played out with the break, push to a new extreme. The bigger downtrend, the wider one like this. Now, because we have such a significant retracement back above the EMA, I actually can expect new high for this channel, okay? Because this is such a significant push up. I am still expecting new high, 2 legs down. So I'm thinking long still, but I need to see some second entry long at the EMA. Can I get it? No. An uptrend played out with the break and push to a new extreme. So now I'm going to pause looking to go long. Okay, we keep going higher. We keep going higher. I don't think we can take anything because uptrend just played out. I was thinking there can be some secondary spike in a channel like this. Something like this. But because we broke lower so strongly, I kind of negated this channel because it just doesn't fit that well. We broke lower and reversed strongly, so what I did, I just played break and a new high like this. This was just prolonged bullish pressure, and now I have to draw a brand new downtrend. Something like this. Can I zoom out? I can see some potential resistance maybe here. We're a little bit far away from this, so no super confirmed structure. I'm going to be following short-term trends. Okay, this is the channel right now that I'm following. New low first entry short. I was looking for second entry short at the EMA, but once again, we broke above EMA. Okay, so you already understand that if you're selling, you need to see EMA acting as a resistance. Once you break above EMA, that's not a good sign that the sellers are in the market yet. Second entry short above EMA, especially since you can see the uptrend is still in play, is not a good setup. I need a lower high confirmation setup. If I have a second entry short above EMA in a situation like this, and market continues to work higher, now broke lower, we have a downtrend breaking new low, and we're back above EMA. So this is price action that is whipsawing up and down, which this means I have to right now anticipate potential trend range because EMA is flat, consistent price swings up and down, downtrend played out, and market moves in pairs of twos once again. So this is looking like a consolidation with bullish bias. We traded up, especially if I'm going to take a look at 10,000 tick chart. It actually looked like there is some bigger uptrend via the channel. It doesn't really fit that well on this chart, so I'm just going to try to navigate this consolidation. No real setups, no real lower highs or high lows, just instant pivot. No, market keeps going lower, and this is important. Because here, if I'm playing the trend range, I would be interested in a felt second entry long below EMA, okay, if the structure is going to be trend range. But because you push back above EMA, and the second entry long worked, it pushed above EMA, and you're breaking the trend range, this right now fits the analysis that the high time frame 10,000 tick chart is bullish, and you can see how bullish this price action was. So if I'm going to zoom out, you can see that the structure is bullish. This was not easy structure to trade when it comes to identifying the channel because every channel looks too broad. This doesn't look that healthy. This looks like a spike up, raw pullback, second spike up, but it's too bullish. I just have to focus on bullish buys because we traded from this point all the way here, 40 points. And this is definitely some form of bullish structure, but it's simply too weak. It's hard to find a channel. Let's see what's going to happen. We have a second entry long here, but you know, I don't have a good confirmed uptrend just yet, so I can't really take it, even though it worked. Market is correcting, and this is interesting. Once I saw EMA rejected here, this is where this channel is a decent opportunity if you can draw it fast enough in time. It is a mini second entry long, visual felt second entry short, potential key entry point. I didn't take it because I just didn't decide in time whether this channel is correct or not. It was hard to find a good channel, but looking back, it's a decent setup. The risk is so tiny, potential 2 key entry points, and even those 2 legs are so broad, that's always a good sign. The broader these 2 legs are, the less likely there's going to be wider trend. This is ridiculous, there is no wider downtrend, so these 2 legs are so broad that this is actually a decent setup to consider second entry long. Work for a scalp, redraw the downtrend working lower like this. Okay, overshoot, break, push to new extreme. We're breaking above EMA, so this is a good sign that right now market may attempt to test the new high of this channel. The high low is not enough. Number one, it's not confirming any decent hypothesis out. This correction was too strong, but more importantly, the body is so far from the EMA tail trap. The body is super far. There's a gap between the body and the EMA, so I can't take it like this. So I was thinking about felt second entry short. Felt second entry short form below EMA, so I can't take it. Can I get something above EMA? We're still below EMA. We're still below EMA. Not a good signal bar. You know, this is a decent second entry long, new high for entry long, second entry long, but it's simply way too late at this point, and market is about to close. So this is the overall structure for today. Downtrend break in extreme, reversal pattern into second entry long. You have to be careful here about the overshoot. This is clear overbought area. Then we had very weak version of the uptrend, not that many setups, and prices ended up working here as well. So I hope you had a good trading. I'm going to wrap it up. I'm going to talk to you next time. Good luck in your trading.